So for me, and this is always the tricky thing is like, will the government overregulate? Well, we know from history, generally they do a little bit. My hope is they don't do it too much because obviously you don't want to stifle the expansion of cryptocurrency and how good it can be with the blockchain and everything like that. But I think that for the most part, it's kind of a double-edged sword because without any regulation, no institutional money is going to come into the space. And when I think about it, I'm like, okay, pension funds have trillions of dollars, institutions have trillions of dollars. If they were just to take, let's say, 3% of their assets and say, okay, we're going to diversify into Bitcoin, Bitcoin's $500,000, maybe $1 million per coin, right? But if they overregulate, does that take a little away? It might. But again, to me, it's like, well, which is the worst, the lesser of the evils? And for me, it's regulation. I would rather have regulation than no regulation because let's be honest, human nature, unfortunately, we've seen it again with Sam Bankman-Fried. You can't trust without like strict audits. You can't trust. There needs to be audits at least twice a year, maybe quarterly audits of these places so that we actually know what's on the books and what's being done. So I mean, that's the key, right? Is that and I'll go on record. I always say this is that in bear markets you get some of your best opportunities. So for instance, there were people buying Bitcoin at 65,000. That wasn't a good opportunity. We obviously see that. Bear markets create the best opportunities. You now have Bitcoin trading at 16,000. I think it might even be in the high 15s by now. So I think you're looking at those type of things you want to be involved in. For me, for instance, I'm a big gold bug, as I said. I also am a big fan of foreign markets right now. I think Brazil is an interesting stock market. It's been consolidating for a long period of time. I think that could be a breakout. And I actually think that now that President Xi in China has been reelected, it does look like he might be starting to soften his hard line a little bit, which then could make the Chinese stocks very, very attractive. Now, there's obviously risks in investing in foreign markets for sure, but to me, it's proper allocation, right? Take a little bit of money there, a little bit of money there, and then have a well-diversified portfolio. For me, I'm now mostly avoiding US stocks unless it's for a quicker swing trade. I think the biggest thing there that people have to recognize is that as a security, you have to look at, well, what does Apple have to do? What does Microsoft have to do? So again, you were talking about audits, regular audits. We need to know what are the rules going to be for, because I think in my opinion, Gary Gensler will make a distinction. He's going to say they're securities, but they're not the normal security, right? You don't have the same structure as Apple. So the question is, what kind of reporting will they need to do? But I would say quarterly reporting is what's going to happen for anything that's a security in the crypto space. And that will take money, right? There's going to be a cost associated to these cryptocurrencies for that. But the way I look at it also, it's gonna keep certain projects that maybe shouldn't be public. Like if you look at the space, the crypto space, there are 20,000 cryptocurrencies. There's no reason to have 20,000. Most of them are junk. So it's gonna help cleanse the system of a lot of the junk if you raise that bar for entrance a little bit. 100 or under. I think that would be the proper amount. And I think, you're going to have ones that are used in the financial industry. You're going to have the Ethereums. You're going to probably have Polkadot, Cardano, some of those that have real good use cases with things built on top of them. But I would say 100 or under when all is said and done. As an investor, it's not a huge deal. And I know that sounds crazy in the crypto space, but like I want to make money, right? And that's my goal, right? I'm not going to hide that. It's all about, for me, if I'm going to buy Bitcoin here in 5 years, I want Bitcoin at 100K, whatever it may be, and I'm going to make a lot of money that way. So if we get in regulation that makes it less decentralized, but it gets me to 100K on Bitcoin in 5 years or less, I'm probably okay with that. What I wouldn't be okay with is regulation that actually causes a hurt to the prices of these crypto assets. 2022 saw the end of money printing. I mean, even 2021, but it was late 2021. And basically what you saw is that when you take away the free money from the system, crypto assets had gotten way too high too fast. And so there's this what I've called the deleveraging event, which has lasted the entire 2022 year, which is less money, more fear. And that again causes these reactions with price just continually going lower. So I think really deleveraging is the one term I would use for the crypto space in 2022. I think 2023, the term will be a bottoming. And then hopefully in 2024, we see a big bull market reemerge. Think 2022 was the year of the dollar, the US dollar. The US dollar spiked dramatically. It basically even pushed gold down, even though gold's a safety asset. Gold did end lower, or at least has been lower for the year. But what I love seeing here is this potential breakout where you had this like W bottom, you broke out, now you're retracing. This is now support. And my guess is you're going to start to head higher. So I would guess that gold in 2023 retests the 2000 and change high and potentially breaks out. I think the dollar is likely made a near-term high, maybe even a longer-term high, as the Fed kind of gets to the backstop and stops hiking rates. And I think that gold, again, is going to be probably the best performing. It was the best performing asset in 2022 when you compare it to the S&P and Bitcoin. And I likely think that it very likely will be that best performing asset again in 2023. Silver also had an awesome move, right? So recently, and I'm talking recently, but look at this. Here's a trend line to there, to there. You broke out and now you've retraced to support. You actually should start to see a move up on silver back to about 25 per ounce on silver here. So I'm bullish on both those metals. I think that, again, the key is what hurt basically the metals in 2022 was the dollar. The dollar was just nonstop up. And because metals are traded in dollars, that obviously took a lot out of them. Just because you had this Fed that was on a warpath. I mean, if you think about it, 475 basis point hikes in a row. I mean, I don't even know. I mean, I guess you'd have to go back to the 80s for that kind of stuff, but it was unprecedented price action that we haven't seen in 40 years here in terms of hiking rates, which, remember, when you raise rates, it pulls money out of the system. And so essentially you're restricting the amount of dollars, therefore less supply of dollars means the dollar price has to go up to meet the demand. And that's what we had. So it was, I mean, everything this year was about the Fed and trying to push that dollar up, and they succeeded, and it probably did bring down inflation, at least somewhat. The question is, how low does inflation get? I eventually could see it moving back towards 2%, but I'm in the camp that inflation will remain elevated for at least a few years. And I think that's going to make it very tough for the Fed to come to the rescue, which is why the recession likely will be a little bit longer. And the thought process here is just based on wages, right? So, oil's come back in. We've had a lot of the industrial metals come back in, but what hasn't come back in is wages. And wages have been elevated significantly. Like someone that was making $15 an hour is now making $25 an hour. And what we have to remember is that businesses can't double their like you didn't see a Whopper double overnight in value in price. So what businesses do, what they'll do is they'll raise by 10%, which the consumer can handle, and then next year they'll raise another 10%, maybe another 10%, and they'll raise those costs over a period of time. And so because of wages going up, it's going to take a little bit of time to bring that ultimate, kind of inflationary thing back to 2%. So I would say honestly, I don't expect 2% inflation at least until 2025. Gold for me, for sure. I love the price action that we just have gone through. You've had a little short-term breakout on gold. We kind of just talked about this before, but here's your trend line, little W bottom. I love how the double bottom held. Twice it tried to break and held. Then you got this bullish move. Now you're consolidating. This is going to be support. I would look at buying 1725 an ounce on gold and expecting another bull move to the upside. We do get the Fed minutes out this week, so that should be interesting as well. So again, I would look for higher prices in gold into year end and in 2023. With silver being an industrial metal, let me just bring up that here. Let's look at silver real quick. Same thing with silver. It had this beautiful bottoming pattern. It broke out of short-term resistance. It's now retraced. I would expect another move up, and I think $25 per ounce on silver is likely where we're going. But it broke a very key support level, and it has been trading lower. Let me show you guys this one. So this support line, you can see how it hit here, here, and here. Then it bounced, and then it broke right here. So Tesla, to me, you will have a short-term bounce around 166 to 165, but then it's headed likely down to about 137 before it makes a major support level. So I think, again, right now we're getting close to a short-term bounce in Tesla, but I still think it's got more downside after that to go. I think, again, with Elon Musk buying Twitter, and he's, now he's tweeting like 10 times a day at least. it would concern me. If I was a Tesla shareholder, I'd be concerned that his focus is now getting taken away from Tesla and growing that company. He now has he had a lot before on his plate, rocket ships and Tesla and this and that. Now he's got Twitter to deal with, and he just paid $44 billion for it. So he has incentive to really focus on Twitter and get that working right. So again, I think it takes his focus away, which is never a good thing if you're a Tesla investor. Term bull flag on Microsoft. So, you might get a pop into the holidays here. You can see this little consolidation right here. But ultimately, I would be shocked if the stock doesn't trade lower. There's this pivot from just before the COVID collapse, which is around 187 to 188. I'm kind of, focusing in that might be where this thing is headed in 2023. And again, I think the bottom line is that if we eventually see, and again, it's important to recognize that the Fed hiked interest rates 75 basis points 4 times. They're likely in December going to hike another 50 or 25. It takes 6 to 9 months for an interest rate hike to filter into the economy, which means we haven't even felt probably 3 of the 4 75 hikes. And so you have to think that that's going to continue to slow the economy, push us into recession. And then, it doesn't matter which publicly traded company you are, Apple, Amazon, Microsoft, you're going to see a slowdown in consumer spending, and that's going to hurt the bottom line. I've been doing this now for 20 years, and there will be a point where I start paring back what I do. And I'm like, it's crazy how busy I am on a daily basis. So there will be a point where it pares back, which is a healthy thing to do.